A very good evening, everyone. On behalf of NISM and India Bonds, I would like to take this opportunity to welcome you all to today's webinar, which consider types of bonds, features, and advantages. Today, we have two renowned speakers from the industry who will be taking this webinar. We have Mr. Vishal Goenka, co-founder of India Bonds, and Dr. Kapil Shrimal, associate professor at National Institute of Securities Market. Before we begin, let me give you a quick introduction to our speakers. Dr. Kapil Shrimal is Associate Professor and Program Director, PGBSM and PGCSM at NISM. He is having more than 16 years of experience of academic and 1 year experience in corporate. He has started his career with ICICI Prudential LIC and worked with institutions like Prestige Institute of Management and Research, Indore, Symbiosis University of Applied Science, Indore, Marwadi University, Rajkot, etc. His last assignment was with PIMR Indore. His main area of teaching and research is financial planning, portfolio management, derivatives, financial modeling, financial management, etc. He has conducted many investment awareness programs on behalf of SEBI, NSE, and ICAI India. Dr. Shrimal has received Best Faculty Award from Dainik Bhaskar in the year 2012. He has also received Best PhD Thesis Award by Jaipuria Institute of Management Indore in the year 2018. He is into the editorial board and a reviewer member of International Journal of Accounting and Financial Management Research. Dr. Shrimal has done his PhD in Management Finance from Mohanlal Sukhadia University, Udaipur. A very warm welcome, sir. Next, Mr. Goenka. He is a seasoned expert with over 20 years of experience in the fixed income, currency, and credit markets. He has held key leadership roles at global investment banks such as Dasht Bank, Merrill Lynch, and RBS, operating across major financial hubs including London and Singapore. Mr. Vishal's extensive background covers sales, trading, and credit trading with notable experience at Dasht Bank in Singapore and Merrill Lynch in London. He also holds an MBA from the prestigious London Business School. Before we start, let me convey the major areas in which this webinar will touch upon. In today's session, we'll delve into the different types of bonds from government and corporate bond to municipal and high yield bond. We'll examine what makes each of these type unique and explore their specific features and discuss the potential advantage that they offer. Vishal sir, a very warm welcome to you as well. Just a few
Yes.
announcements. We will be taking all the questions at the end of the webinar, requesting all the participants to put their queries in the Q&A board. Our speakers will be very happy to answer all your queries. So without taking any further time, I would like to hand over the webinar to Vishal sir. Over to you, sir.
Thank you so much. A warm welcome to all our participants. Uh, we started this initiative of fixed income education webinar with NISM few months back, and thousands of you registered, and we are very happy and very glad and humbled to see the tremendous interest. As mentioned, the most exciting part is Q&A. We will do our presentation for 30 minutes, and usually we try to answer 75 to 100 questions at the end. Some of you have already written 100 plus questions to us, and we will try and address that. One important point after every webinar, yes, you will get an NISM certificate. It arrives in 3 to 5 days. We get a lot of queries for that. But thank you again for joining, and I'll pass it on to Dr. Kapil to start the webinar.
So thank you, Rajlakshmi and Vishalji for your kind words. So as part of the webinar today that will discuss what we are going to content will be there. So I will start with the various basics of the bonds with the first slide, what bond market is all about and how it works. So this is the outline of this today's program or the webinar, that what are the bonds, debentures, what are the crediting agencies, roles, coupon and yield difference, especially that we are going to discuss, because in the last 3 webinars that we have received some questions, what is the difference between coupon and yield? So that's why we covered this also. Listed, unlisted bond that we are going to cover. Then what are the various types of bonds and who are the issuers of the bonds, like the corporates or the government or RBI, that we'll discuss. structure of the bond market, and last we'll take the question answer. So starting with the very first part, that what bond is or the fixed income security. So can we have the next slide? Yes. So as we discussed in the previous webinars also, what is the bond? So bond is nothing but when a company wants to raise a capital, they have the two options, that either the equity or the with the help of the debentures, or that is NCD or the bonds will be there. So that is a part where the company is a borrower and the person who invests, the person is known as a lender. So there is a relationship between the borrower and a lender. So always the company is known as the issuer or the borrower will be there. Generally, the bond is having a face value of 10,000 rupees. The minimum as a corporate bond value, that will say that is the 10,000 rupees the face value of a bond. So that on that value, the company generally issue the bond is there. Now, whenever the lender will lend a money to the borrower, like as an investor, you are lending a money to the company or the issuer, the company will pay you the coupon. That coupon is known as the interest every year, that we can say. Okay. So whatever the investment you are doing based on the face value, so here the example is there, the 10% interest that we written over here. So let's take an example, you invested 10,000 rupees. So 10% interest of 10,000, that is 1,000 rupees will be paid you. Depending upon the predetermined frequency of the interest, either it will be annual or it will be half yearly, it will be quarterly, or it can be monthly also. Depending upon that, it will be interest that will be given to you. At the time of the maturity, at the end of the bond's life or the cycle, that we can say, the face value will be paid by the company to you. So that is a cycle. Apart of this, whenever the bond is issued into the market, the company has to compulsory take the rating by the credit rating agencies. So it can be investment graded bond, higher rated bond, or the lower rated bond can be there. So any bond below triple B minus is non-investment graded bonds will be there. So that again, as a part of the rating, we'll discuss. And as a part of the documentations, or when the bond is listed into the market, yes, the company has to follow all the rules and regulations of the institute, individual or corporate documentations will be issued. So that is a part of the basic definition of a bond, what bond is all about. So that is nothing but the security which the issuer issue, and the lender will lend money to the borrower, and on interest you are getting at that part. So that is a basic part of there. So I think next part is
Yeah. So no, thank you. Thank you, Dr. Kapil. So basically, I think just to add on, a bond is a loan to a company. If the way I understand it, you can invest from as little as 10,000 rupees. You get regular interest for it. And we will talk about these various things about credit rating maturity in the later slides. But we want to keep this very, very interactive. So we have 2, 3 poll questions
yes.
where we ask the audience. So can we have the first poll, please? Kindly input. How familiar are you with different types of bonds? Is the question. Very familiar, somewhat familiar, not familiar at all. So today's topic is types of bonds. We want to understand how familiar are you. Can we start the voting, please? Enable the voting, please. Great. It seems that not many people are very familiar. Somewhat familiar, not familiar was pretty highly ranked. So can we just move on to the next slide, please? So before we understand bonds, this chart will explain to you about financial awareness. Country में लोगों को equity के बारे में बहुत पता है, FDs के बारे में बहुत पता है, because our parents and grandparents taught. So just to give you an idea of the size of the market, there's $1.58 trillion in outstanding FDs, and 46% of that is जिसको हम कहते हैं individual and household fixed deposits. So most of us invest in fixed deposits because our parents and grandparents told us, but somehow in bonds you can get a higher return. So in equity, obviously, we are an equity crazy country. Maybe अभी एक महीने से थोड़ा mood खराब है, but 20% of retail participation, if the market of size is 4.75 trillion, either through direct or through retail mutual funds, 20% owned by retail. Bonds, very few people own. The reasons for कि लोगों को पता नहीं है, awareness and knowledge is low. It's not transparent. You don't know where to find pricing, or you don't have any accessibility. I mean, platform like India Bonds has been created to give you that access, and you don't have enough investment options, right? Should we move on to the second poll, if that is working at this stage? Okay, so over to just to explain on some of the aspects of bonds. So in bond, what does important is to know when is the maturity. Maturity means अगर आपने अपने friend को, you've given your friend money today or the company, they say maturity is 3 years. Means they will pay you interest, 4 years, for 4 years, and then they'll give your principal or the face value back. That is called maturity. When you invest in a bond, payment frequency is what you have to note. Payment frequency, you can choose. कई लोग कहते हैं कि I want a monthly coupon because people like us have monthly EMIs. So this additional income stream you create apart from your job or your work helps you to earn money monthly and pay your EMIs. You can choose bonds which pay quarterly, means every 3 months, semi-annually, or annually. So when you're investing in a bond, you have to keep your horizon in mind. Ki I want to invest for 2 years or 3 years, and what is the kind of cash flow inflow that do I expect back? So that is maturity and payment frequency. Next slide. So this thing we touched upon, credit ratings. Nothing to get confused. Everybody has a CIBIL score. आपको पता है you have a CIBIL score, right? Uh, the lower CIBIL score you have, the cost of loan for you will be higher. Similarly, companies have a rating. The lower the rating, they will pay you a higher interest to raise money, which means the company's credit rating or credit scoring is slightly weaker. The credit rating is determined like this. AAA is usually very solid public sector companies and some private companies. AA plus A. So lower, as we go lower on the scale from AAA to triple B, the interest rate on these bonds keep on going higher. Obviously, the lowest triple B and triple B minus, really a lot of research has to be done. So we will warn all our investors that please do your own due diligence before you invest in these kind of securities. They give you a very high yield, 13 to 14 to 15%, but be very careful when you are investing here. Now, the entire credit rating, who gives these credit ratings? Credit ratings are given by these institutions below. CRISIL, ICRA, so 5-6 तरह के institutions है. All these institutions are regulated by SEBI. Just remember that whichever credit rating you are reading is given by an institution which is regulated by SEBI. So if something goes wrong as an individual investor, you can always go to SEBI to kind of answer your questions. Companies can go up and down. There will be risks that we're going to talk about. Before I pass on to Kapil sir, one important question is why should you invest in bonds, right? So this is about portfolio diversification because everything you cannot invest in equity. Equity markets, as you know, are volatile. आपको लगता है कि अरे let me save some money on the side, which is kind of lower volatility and kind of little protected and earn some income, and I'll probably have use of money in 3 years. Sometimes for child education, to buy a bike, to pay for a house loan, or even for your elder parents. Let's move on to the next slide, please.
Thank you, Vishalji. So now the question comes, what is the coupon and what is the yield of a bond? So simple example, if you take, when the bond is issued into the market, the coupon is mentioned when the bond is issued. So coupon rate is fixed. It will not change over the period of the time till the maturity of a bond. So here the example is there. Let's take an example. One ABC company is there. The face value of a bond is 10 lakh rupees. Now, when it's about the face value of a bond, that is the issue that the amount you're investing, that is the value of a bond of investment is there. If the 10% is a coupon, so it means that over a period of time, and coupon is annually, so you're going to get 1 lakh rupees per annum of the investment of the 10 lakh rupees for the next 5 years. And at the end of the maturity, the 1 lakh rupees will be given back to you. So that is the part. Now, in the same part, you can see there is the yield of 11.11% that is mentioned over here. So yield, if the yield of a bond is higher than the coupon rate, if the yield of a bond is higher than the coupon rate, then we'll say the bond will trade at discount to the par. Discount to the par means the market price of the bond will be lesser than the face value. Okay, here the example is there that since the coupon rate is lesser than the yield of a bond, so it is discounting the present value. At the same way, some of the bonds will find in the market where the yield is less to the face value or to the coupon rate, it will be the premium to the par. It means the bond price can be higher. So here it is discount. So bond price is 9 lakh rupees over here. How to calculate the coupon? That is nothing. Whatever the coupon amount is there or whatever the rate of interest is there, it will multiply by the face value. The coupon amount will be there. How to calculate the yield? So this is an example of the current yield. So current yield will be calculated. What are the annual coupon that the company is going to pay you divided by current market price? So 1 lakh divided by 9 lakh rupees is the 11.11 is the current yield is there. So coupon is the periodic payment to you and yield is absolute return with having the consideration that whatever coupon that company is going to provide you, you are reinvesting that coupon at the same market rate into the life of the bond. So that is the yield, basically the part of there. So yield and coupon, no need to confusion. Coupon is the what we can say the periodic payment, and yield is absolute return in the form of the life of the bond to you. So that is the difference between yield and the coupon.
Yeah, just to add, coupon is fixed at the time of issue mostly. So you know
Yes,
कि 8%, 9-10% आना है, and yield is determined by the change in the price of the bond because
price of
price
coupon.
might go up when rates go down. Okay, next slide, please.
One more part is there. The price and yield is a negative or inverse relationship is there. If the yield is high, the bond price will be less, and if the yield is low, the bond price will be higher. So that is the inverse relationship between the price and the yield of a bond will be there. Yes. So next slide, please. Yes. So now again, there are two types of yields are there. Previous one, if yes, two types of yield is there. Number one is the YTM and the current yield. Previous. YTM and the current yield are the two types of yield will be there. So when we'll say about the YTM and the current yield, YTM is a yield to maturity. So what will the maturity or what will the yield till the maturity of the bond will be there? Okay. So that is the that is an expectation that you are holding a bond till the maturity. So that will help you at the time of issue. It will the bond issuer or the company will give you this will be your YTM. So when you are investing into the bond, so you should know this will be the this will be the absolute return in the terms of the holding of a bond till the maturity will be there. Okay, and the current yield is give an idea to you if I invest in that bond, what yield that bond is providing in the current market rate. So what is the current market price and the coupon? So coupon divided current market price is the current yield. So always when you invest into the bond, the YTM might be different and the current yield might be. So there will be certain difference in both of the rates. So but at the time of investment, the YTM, the current yield, it will give an idea whether I will, if I invest in that bond, what the currently that bond is going to provide with the yield, and if I hold till maturity, what will the YTM in the till the maturity will be there for me. So this is the current YTM and the current yield are the examples over here. And anything, Vishal, you want to add on this YTM or current yield or?
No, absolutely correct. I mean, basically, yield or yield to maturity, YTM means what is the returns on your bond investment.
Okay.
So
Yes.
very simply keep that in mind, not to get confused by jargon. Current yield is, as sir explained, is coupon by the face value of the bond. So let not people confuse you. Coupon and YTM is the most two important things in a bond.
Yes. Yes. So can we go to the next slide? So again, when we go about the market, there are two types of debentures or the bonds are there into the market. Number one is the listed. Number two is the unlisted. As a market is, we know the company is going for the public. So public is must be the listed bonds will be there. So as a part of the regulation, always the listed bond are regulated by the regulatory body like the SEBI. And the unlisted bond is there. The regulatory body, the company is registered under the Companies Act 2013 will be there. So there is no regulation of the SEBI will be there on the unlisted bond. Listing of the listed bond will be done on the exchange like the NSE and BSE, but unlisted bond are not listed on any of the exchange. If it is not listed on exchange, then the next part will be that there is lesser liquidity because liquidity will be provided on the exchange to you. Okay, so when the bond is listed, definitely liquidity will be there based on the exchange platform like the request for quote or OTC. Sometime OTC trade is also then. Then once the OTC trade is done, it will go through the exchange. But unlisted bonds are generally the OTC trades will be there. Okay, if the listed bond is there and the company delay in the interest payment, then the additional 1% additional interest in the delay of the listing will be there. 2% additional interest on the delay of the security creation, 2% per annum over coupon interest case in default will be there. So the regulation have the SEBI has given certain guidelines. If the company fails to pay the coupon, company fails to delay the listing or something will be there. So penalty will be charged to the company. But on unlisted bond, there is no penalty will be there. And yes, as a part of the disclosure, if the company is listed, the company has to maintain all the disclosures of the financial corporate governance report and end use to the fund to the investors. But unlisted company bond doesn't have the disclosure of the final reports to the investors. So if you are investing the listed bond, that is a good for you because all the transparency and everything is regulated under SEBI will be given to you.
Yeah. Maybe I'll just add here. So the
Yes.
key takeaway for you is that investors should invest in listed debt only
Yes.
because you have SEBI regulation. Unlisted debt, the company has no obligation to report results. So we do find a lot of companies issue unlisted or some people try to tell you unlisted and they'll tell you 13%, 14%. आप खाली rate से attract मत होइए. Because if something were to go wrong, no one is going to help you. SEBI and the regulation of this country will not help you. SEBI only wants companies mostly to do listed bonds. And so please make sure when you're doing a bond investment, ask if the bond is listed. Also, whichever platform, ask if they are SEBI regulated entity. Online bond platforms have to be SEBI regulated. If they are not, do not buy bonds from them for your own safety.
Yes. Next slide, please. Yes, so now we are coming to the today's topic, that is what are the various types of bonds. So the types by the issuer. So whenever the bond is issued into the market, there are various issuers are there. Mainly we'll say they are the G-SECs. Number two is the corporate bonds is there. So when we'll say about the G-SECs, so G-SECs are the government regulated securities which are issued by the Reserve Bank of India on behalf of government of India or the state government, or that will be there. So but the issuer body is the Reserve Bank of India for this. Okay, so G-SECs, the government of India, central government comes with a souvenir issue will be there. That is G-SEC. State government also want to raise a fund again that will be issued by the Reserve Bank of India on behalf of the state governments. So state government guaranteed bonds will be there. State development loans will be there, which are issued by the state governments, and the PSU. So again, when you will say about the PSU, public sector undertaking, so it is regulated by the Security and Exchange Board of India, SEBI. Okay, and that will be listed on the platform of the NSE or the BSE will be there. Now the corporate bonds, when the company or the private company, a part of the government, a part of the PSU company wants to issue, so that is known as the corporate bonds. Generally, they are known that they are called as the NCD, non-convertible debentures, or the bonds can be used. NBFCs can also issue the bond, because we know the NBFC generally lend the money into the market. So for lending a money, definitely they want a money also. So their main part by issuing of the money into the market, definitely the bond into the market, they can generate a money and they can lend into the market, NBFCs, and the banks bonds are also there. So the corporate bonds, banks bonds, NBFCs and PSU come under the regulation of SEBI, whereas the GSEC or state development bonds come under the regulations of Reserve Bank of India. So these are the majorly two types of issuers are there which issue the
Yeah.
bond in the market.
So just to add, why we are differentiating is because if it's a government GSEC or a HDL, that is government of India, would say better risk. India may, they're also sometimes called risk free, is not there in GSEC, right? GSEC is risk free. And like in equity market, there are various sectors, right? If you are investing in equity, now equity prices move by different things. When you buy a bond, आपको सबसे ज़्यादा important है कि वो how secure is the issuer. Everything comes with a risk, which we'll talk about later, but this helps you to decide. So I think the our polls, sir, our polls is kind of fixed, the voting thing. So can we have a second poll, please, for audience to type in the answers? Question, which feature of a bond is most important to you when investing? Credit rating, yield, maturity period, yeah, liquidity, means how soon can I and how quickly I can sell. Yeah. I'll repeat the question. Which feature of a bond is most important? Credit rating, yield, maturity, or liquidity? Okay. Yes, we're done. I think mostly people are saying liquidity and credit rating. I think majority people are okay with. That's fine. Let's move on to the next slide, please.
I think आपको एक option यहाँ पे और रखना था, that is all of them.
All of actually, you're very right, sir. All of them are very, very important.
Yes, yes.
So also types of bonds carrying on with this, the types of bonds is also by structure. So one thing important, because हर bond same नहीं होता है, right? हर दोस्त same नहीं होता है, bond same नहीं होता है. So some bonds either have an interest rate which is a fixed coupon. I'll start from the left. These bonds at the time of issue tell you that I'm going to pay you, for example, 10% every year for the next 5 years. Then we have a zero coupon bond. This is very interesting. So when you invest in this bond, you basically say, I'm going to invest now. I don't need any money. Give me lump sum money after 3 years or 5 years. So you do not earn any interest income, but you kind of earn right at the end. There's a very interesting bond issued by REC recently, which is a zero coupon 10-year. We are not tax experts, but in that, at maturity, whatever gain you make, let's say the bond is trading at 55, the 45 points that you gain, percent that you gain, is treated as long-term capital gains. So actually, आपको उसमें benefit मिलता है. Tax-free bonds were issued in India about 15 to 20 years ago to facilitate infrastructure projects. So usually for high net worth individuals or highest tax saving bracket, they trade around 5.25, 5.30. So pre-tax returns around 7.5, 8% इसमें हो जाता है. but these are issued by national institutes like REC, PFC. Callable and puttable bonds. Also, when you buy a bond, see, put call, people understand in equity. Uh, Callable is simple. Ki suppose you have a 5-year bond with a call option of 3, which means issuer can buy back that bond at par, which is 100, from you in 3 years. Puttable, where the investor has the right to call for money. So if it's a 5-year bond with 3-year put, investor can say to the company after 3 years, return my money. So why I'm saying is reading these details is very important. Some bonds are floating rate, which actually are very good. Agar aapko interest rate risk nahi lena, you don't know which side interest rate is going to go. Obviously, right now the market expectation globally is that interest rates will go down. In India also in the next 1 or 2 years. Floating rate is tied to a benchmark. कि भाई आज interbank rate ये है, the institution's borrowing rate plus some spread. There are capital gain bonds also. These are special bonds whereby any capital gain you make on sale of house property or real estate, up to 50 lakhs, you can invest in this bond. It pays you a fixed percent and 5-year maturity, and it becomes tax free after that. So otherwise, people have to pay tax on their gains in the real estate in that same year. People defer that by saying, I'll invest in tax capital gain bond. Perpetual bonds are also called tier 1 bonds. Perpetual bonds are usually issued by banks in India. They issue perpetual to get better credit rating and better credit strength from credit rating agencies. These perpetual bonds have a call. So basically, on paper, they're never supposed to mature, but they have a call date in 5 years. So issuer calls back the bond and repays you after 5 years. So a lot of banks, SBI, PNB, BOB, Bank of Baroda ke perpetual bonds hai. Just understand the risk that it is a perpetual bond. Perpetual bond gives you slightly higher yield than a normal bond of the same bank. Subordinated bonds are also issued by banks. Subordinated ka kya hai ki bhai, the senior bonds get paid first, then the subordinated bonds get paid. So again, you get a little higher payment, but 75 to 100 basis or 1% higher for subordinated bonds. Let's move on to the next section, please. This is about the structure of the debt market. This is for a lot of our students and enthusiasts. Debt capital market means that's the capital market wo hota hai jahan pe first time bond issuance hota hai, right? And then it starts trading. That's called the secondary market. Broadly divided into two: government securities and corporate bonds. Government securities are which are issued by state governments and central governments. Corporate bonds are issued by companies. State and central government bonds also have different kind of securities, which is SDL, a state development loan, GSEC, T-bills. Treasury bills is kind of an instrument which is issued for less than 1 year by the central government. So sometimes you have money for 6 months, you just buy a T-bill, a treasury bill. Corporate bonds are issued by public sector or private sector. People did ask a difference between NCD and bond. There is no difference. Just the market knowledge of कि भाई corporate bonds are called NCDs and bonds issued by government have been traditionally called bonds. So debenture और bond में कोई difference नहीं है. वो खाली market structure है कि government bonds को traditionally we've called them as bonds and corporate bonds we've called them NCDs. There are also market linked debentures. There used to be a taxation loop here which have been closed, where you buy a bond which is tied to something else. So you say the return will be based on return of Nifty or a government security or things like that. I think we move on to the next poll. So one thing we try to do on this in this thing is to, a lot of people have asked how to buy a bond, right? So before we go to the risks and things like that, we'll give you a 3-minute demo as to how to buy a bond online on a, let's say, India Bonds website. Can we get the demo going, please? इसमें मैं आपको ये बताना चाहता हूँ कि it's very, very simple. You can do a digital KYC in 3 minutes online these days. And you can also buy a bond online only in 2 minutes. But what to look for when you go online is what we are going to talk about. So simply this is, as you can see, Dr. Shival and me are there on the top right. But the way to look at it is, if you want to read more, you can explore bonds, what are bonds. But basically, offers and categories gives you an idea. Let's start from high yielding. तो ये bonds हमने classify किए हैं, which give you a high return, more than 10%. Or you say, I want state guaranteed. So you click on state guaranteed. Some people say, I want to invest in 10,000 rupee denomination bonds. So we've made it very easy for you to select. And similarly, there are other categories. Some people say, I want monthly income. So these are the bonds available on monthly income. So you have various choices. Let's go back to high yielding. Let's try and buy a bond now. Satya Micro, for example. So what I'm trying to tell you, all the information that you need is here. And this is regulated by SEBI and as prescribed by SEBI. You can read the coupon rate, the rating, the maturity date. Here we are trying to buy one bond for 1 lakh. It shows AMO because market band ho gaya hai, but we have a facility 24/7. You can put your order in. Can we scroll down, please? There is a cash flow. So people can say, what can I earn? Coupon is there till the maturity of the bond. If you go to what is my risk, down, there's a credit rating. You can download a rating profile or rating report of that bond. There is on the right, you can download the information memorandum. These are 100-page documents, but everything is available to you. And this is prescribed by SEBI. India Bonds is a SEBI registered website. Just go up again, please. We'll just start. So we will not go through this because the market is closed. But you press buy a bond, it goes straight to the payment gateway. One very important thing इसमें यह है कि when you purchase a bond, your money goes straight to the national clearing exchange. The money does not come to India Bonds or any broker. So in fact, it is better than buying equity. If you remember, in equity, if you buy, your money goes to your broker who will transfer to your demat account, or you already have money lying. आपका पैसा already broker के पास पड़ा है. Bonds में कोई risk नहीं है counterparty का. As soon as you press pay, your money goes to the clearing exchange और वो demat अकाउंट में आपके बॉन्ड आज या कल ट्रांसफर कर देते हैं. लेट्स गो टू प्रोडक्ट्स. सिमिलरली वी हैव पब्लिक इशू. पब्लिक इशू आर इशूड बाय कंपनीज. द गुड थिंग इज कि इसमें प्राइस ट्रांसपेरेंसी है. एक ही प्राइस पे सबको मिलता है. फर्स्ट कम फर्स्ट सर्व होता है. दीज आर द रिसेंट पब्लिक इशूज वी डिड. Again, you can click and pay by UPI up to 5 lakhs and directly invest in a bond in 2 minutes. Go back to, bond case. I don't know how many people heard of small case. Bond case is very simple. When people say कि I don't want to buy only one bond, मुझे bond नहीं समझ में आ रहा है, तो आप एक portfolio of bond 2 मिनट में खरीद सकते हैं. Just go down please and view bond cases. इसमें कुछ advisory हमने नहीं रखी है. You can choose by different baskets and threads. You can say, let's say high yielding. I want to buy high yielding bond. Ranked by the yield. There are 5 top bonds. You can add or select. Let's say you want to not select Satya, add some other bond. Go down. उसमें लिखा है कि there are so many bond choices. Yeah. So you see on the top, you can see you said I wanted to invest 5 lakhs. 4 lakh 88 आपका total settlement amount है. Your weighted average maturity is there, 5 ISINs. Your weighted average yield is 11.62%. So there is a question कि debt mutual fund is better or bond is better. Both are good. When you do a own bond case, you can construct up a portfolio much higher return than a debt mutual fund बना सकते हो. So liquidity और higher yield का ये difference है. We have some very exciting tools for you to experiment. Bond directory पे जाइए. I will not go in detail. You can type any bond. Let's say type Tata Capital. So this has a database of 20,000 bonds in the country. You can go and look at detail because बोले मुझे bond खरीदना है, पहले पढ़ूँ तो सही कि bond के बारे में क्या है. Let's go to the next tool, bond calculator. This is the most powerful tool. It is the only publicly available tool in the country. हमने जैसे फॉर एग्जांपल अवांसे बॉन्ड इसमें लगाया है. यहाँ पे आप प्राइस खुद डाल सकते हैं जो सर बात कर रहे थे yield to maturity का, and calculate the yield to maturity on the right straight away. 9.33. So you don't have to rely on anybody, make your own spreadsheet. You can DIY yourself, load the bond on top. We have about 10,000 cash flows of bonds in India. You can load it and calculate the yield yourself. कि इसमें interest कितना है, क्या है. Let's go to the last tool, please. Portfolio dashboard is very beautiful. हर इन्वेस्टमेंट पे रिस्क इज वेरी इंपॉर्टेंट. इक्विटी में आपका इक्विटी पोर्टफोलियो ब्रोकर दिखाता है, दीज आर योर सिक्योरिटीज. इन बॉन्ड यू कैन सी योर पोर्टफोलियो. सो फॉर एग्जांपल दिस पर्सन हैज 65 lakhs invested. Average maturity is 4 years 9 months. And you can see your entire cash flow कि अगले 10 साल 5 साल मुझे कैसे कैश फ्लो आने हैं. राइट में यू कैन सी द इन्वेस्टमेंट वेटेज, कौन से बॉन्ड में कितना आपके पोर्टफोलियो में है. स्क्रॉल डाउन. You can also see by investment rating. Risk देखते हैं ना हम लोग कि भाई डबल ए में 14 bonds मैंने invest किए हैं, डबल ए माइनस में 5 bonds किए हैं. Go up again, please. I'll let you play around for people who come. Cash flow timeline. This is a very powerful tool. This gives you a sample कि आपको पूरे अगले 5 साल क्या रिटर्न, आपने 65 lakhs बनाए हैं, your portfolio will return you 1 crore 5 lakhs across a period of time depending on your bond selections, right? One very important thing, bond uni. Most of webinars that Dr. Kapil and me do ultimately go on this. This is an interactive ed tech बोलते हैं ना, जिसे आप कोई भी टर्मिनोलॉजी फिक्स्ड इनकम का डाल के आप खुद रिसर्च कर सकते हो. वीडियोस में एक बार क्लिक करिए प्लीज. जस्ट क्लिक ऑन वीडियोस. This is also a question, where is this recording available? Recording of these webinars are available 4 to 5 days on our website. For example, last time we did this webinars factors to consider before buying, and all the other knowledge, everything is here on this thing. So can you stop sharing, please? And let's go back to the slide presentation. So like everything has risks, bond financial instrument उसमें भी होगा, and who better than Dr. Kapil to tell us कि भाई risk क्या है इसमें? Nothing is risk free, everything has a risk. Please sir, over to you.
So yes, risk is associated with any type of instrument, whether the listed or unlisted is there. So whenever you invest into the bond or any of the fixed income security, the first risk is the liquidity risk, whether that bond is liquidate into the cash or not. So liquidity is one of the biggest challenge when you invest into the bond. If you hold a bond till maturity, then liquidity is not an issue, because at the time of maturity, definitely the company is going to pay you the money back. But in between, if you want to sell the bond into the secondary market, whether the liquidity is there or not. Number two risk is the market risk. We all know the market is very volatile. So due to the change into the interest rate, or due to the change into the, or the geopolitical risk, or due to the risk of the some crisis into the market, something like that. So what will be the risk into there? So I'm just giving the best example to you. Few, that is almost the last year, the Fed has suddenly increases the rates of the basic rates of the government. Due to this, the interest rates of the Fed bonds or sovereign bonds has increased. If the interest rate increase, the price will go down. That I told you in the previous slide also. The price and interest or yield is negatively related, or inverse relation is there. So that risk is there. So suddenly the interest rate will increase, the price of the bond will go down. And at the bond, if you want to sell into the market, you have to sell at the lower price. That can be there. So that market risk is always associated. Next is the credit risk is there. If the credit rating of the bond is changed from AAA to BB or BB minus, again the price of the bond will go down, because yield will increase at that point of time. Okay, the credit risk is there. So there can be credit default risk. So credit risk is there. Are the examples in past also, in India also, and in abroad also, where the credit risk is associated with the bonds. And the fraud risk is there. If you're buying or selling a bond with unauthorized platforms or not regulated platforms, or unlisted bonds can be just, there can be chances the fraud risk is also there. So broadly, when you invest into the fixed income security, you will see whether the liquidity is there or not, whether the market risk is involved or not, whether credit risk is there or not, or fraud risk is there or not. So these are major risks that you have to always study before investing into the bond. Anything, Vishalji, you want to add on this part? So otherwise.
No, absolutely right. Nothing is risk free. लोगों को ये perception है कि bond means is guaranteed. Bonds are not guaranteed. Bonds are not assured. There is nothing guaranteed. Nobody is going to guarantee to give free 8%.
Yes,
Will you?
even in the past, we have seen the country like Argentina, the sovereign bond of the Argentina defaults.
हाँ, no. So ऐसा कुछ है नहीं. India is thankfully a very strong economy. So please keep in mind the risks. Everything has a certain risk.
Yes, yes.
I think we move on to the Q&A section. Kapil ji, बहुत सारे questions आए हैं.
Yes.
So I will try and read those questions first from the audience who's live here.
Yes.
Hopefully काफी answers we've already done, but quickly from a macro perspective, there are some questions.
Okay.
Bond market is regulated in the country, as Kapil ji said. RBI regulates government securities and state government issuances. Listed corporate bonds are regulated by SEBI. So ये जो bond issuances है, you are under the regulatory framework. When you buy from a platform like India Bonds or any other platform, make sure they are regulated, right? So that is very, very important. A question is ki, why is the face value of bond different than the equity? Kapil ji, you want to answer?
So generally, when we say about the equity face value, it is in the denomination of the 1, 2, 5, and 10. Okay, so there are various denominations of the equities there, and equity is issued at different prospects, but bond is again having the different prospect where the face value of the corporate bond is 10,000 rupees, that minimum investment, but the face value is 1,000 rupees can be that we can consider when we do the calculation. Yes, so 1,000 rupees is a part. So
Very
it,
interesting.
so
Sorry, sir, not to cut
yes,
off. So 10,000 से है because it's round number, it's easy
round
to
number.
understand.
Yes, round number is
Why
equal.
should if someone invest in equity when bonds are giving 13%? I don't have the answer. सर हमारी कंट्री में इक्विटी के लोग पागल है पर आप स्टेबल 10-12% भी इन्वेस्ट कर सकते हैं.
इन्वेस्ट कर सकते हैं. Yes.
Types of bonds have been answered. Can a bond default? I think the answer
Yes,
is
the
yes.
bond can default. Yes, so we are given the examples like even the souvenir bond of Argentina is default. In the past of the bonds, there was a issue of the credit risk on these ILNFS and Divan Housing Finance bonds was there. So that there was
So
a
I will add to this, people talk to me about Divan Housing and ILFS. तो मैं सबसे ये कहता हूँ कि उस टाइम निफ्टी भी 5,000 था, like you forget, right? So India has actually, the regulation has dramatically changed since then. Today, if you buy a bond, उसमें कोई भी covenant, if the company does not do, trustee will write to you immediately. So you have access to information, you have access to protection now, which wasn't the case before, right? So that is very important. Somebody is asking, sorry, this is, I think, I'm a MFD, I want to talk about distribution of bonds. Yes, we have a partner program to help you distribute to your clients. You can write to us at partner@indiabonds.com or send us a chat message. We will explain to you how this can be done through our technology. Difference between, sir, corporate FD and debenture for you.
So again, when it's about the corporate FD and debentures, so when it's about the, just take an example of the FD. First, we'll take the example of the FD is there. When you do the FD with a bank, there is an insurance underlying with the FD of a bank is 5 lakh rupees, whereas the corporate FD doesn't have any underlying insurance. When it's about the debenture of a bond, again, the bond of the or the debenture of the corporate is regulated by the SEBI, but corporate FD is not regulated by the SEBI. That is the best difference that you can say. The regulation is there and the liquidity is there. And again, you cannot trade the corporate FD into the secondary market, but you can trade the bond into the secondary market. So these are the
The biggest difference between FD and bonds is upon your investment style. अगर आपको short term के लिए पैसे करना है, आप FD में rates traditionally India में कम थे, अब now they've gone up, but bonds give you potential for capital gains if interest rate were to go down. Very interesting question. Can an unlisted company issue a listed debt security? Yes, absolutely. Unlisted companies have issued listed debt security. The process is different and they can. What is an RBI floating rate saving bond? I can answer. RBI's floating rate bond is issued by RBI, where the interest rate changes with the RBI interest rate. तो क्या होता है? You're hedged for interest rates. Now, today in a scenario where आपको लगता है interest rates are coming down next 2-3 years, you should not buy a floating rate bond because उसका rate नीचे जाएगा. The only thing with this bond is it's, I think, a 7-year lock-in. You cannot trade it out before 7 years, so you're locked up for this bond.
Locked up for this, yes.
TDS on bond interest, as per government regulation, listed bonds have a 10% TDS rate. However, for senior citizens or 60 plus, you can apply for exemption from TDS by filling a 15G or 15H form. वो forms हमारे website पे भी available हैं. You can write to the company. They also address which company to write to where you cannot get the TDS. Interest income is as per your tax slab band. तो एज लाइक एनी अदर इनकम आपके टैक्स ब्रैकेट के ऊपर आपको इंटरेस्ट इनकम मिलता है. जस्ट इंटरेस्टिंग इज इफ यू मेक मनी, इफ द बॉन्ड यील्ड गोज डाउन एंड द प्राइस गोज अप, आप एक साल के बाद आफ्टर 1 year यू सेल, LTCG or long term capital gains tax is only 12.5%. Again, we are not tax experts. Please do not take this as advice. This is our suggestion, and please consult your own tax advisor.
Yes.
Are T-bills accessible to retail? Yes, T-bills are accessible. Again, on a website, you can go government securities and T-bills. What is the shortest time one can invest in bonds, sir? Normally, bonds are for 6 months to 1 year also, the short time. अगर आपका मानना है कि shortest time as the investment process, that is 2 minutes. One very good question. Sir, in bond case, you said 5 lakh investment, but the settlement is 4 lakh 88. Is the rest brokerage deducted? No, sir. India Bonds as a platform does not charge brokerage to our investors. It is 4 lakh 88 because as couples are explained, कई bond की price is below 100.
Yes.
Some bond prices can be above 100. Since it's a tool where you can aggregate all of it, it is basically the total aggregate is 488. There is no additional charge because वो bond का price 100 के नीचे था.
Yes, because thing is that आपने high yield bond he has selected might be possible where the high yield bond is there. All the high yield bonds are traded at discount only. वो price
Yes.
discount पे ही हो रहा तो that can be lesser. So your investment value will be 488 only.
One question, debt mutual fund has MTM, mark to market daily, but bond portfolio shows you the same yield in your portfolio. Iska, I'll just explain to it. Debt mutual fund has an M2M because their portfolio has to be marked by SEBI regulation. There's a way of marking it. Bond usually hold to maturity hota hai. We do not mark to market our bonds. We are not allowed to do that or have the tools to do that. So the basic difference between debt mutual fund is you have a professional advisor who advises you. You have liquidity available. Advantage of bond is you can actually create a much higher return. तो डेट म्यूचुअल फंड्स क्लासिकली इंडिया में 7% देते हैं, पर आप 9-10% का खुद का बास्केट बना सकते हो. तो यू अर्न हायर यील्ड बट लिक्विडिटी इज लेस एंड यू हैव अ राइट, आई मीन यू हैव अ से इन योर ओन इन्वेस्टमेंट. Whether it meant unregistered with SEBI and providing, sir, इंडिया में सब कुछ होता है. There are, we heard still some unregistered, unregulated entity which is not with SEBI, and they provide, people provide you real estate bond. They say it's a bond, but we have unlisted है. So please note if it is listed or not listed. You said India is equity heavy country. Why? मेरा सिंपल हम्बल एस्पेक्ट ये है कि इंडिया में इन्वेस्टमेंट ऑप्शंस में इक्विटी ज्यादा इन्वेस्ट करते हैं लोग. दी एज द अवेयरनेस इज बिल्डिंग, राइट. दे 175 डीमैट अकाउंट, उसमें इक्विटी ज्यादा है. सर, इज बॉन्ड बेटर और इक्विटी? प्लीज गिव आंसर. ये मैं आपको दे रहा हूँ भाई.
So when we say about the bond better, so I will say the diversity is better. You should have the in a portfolio equity and bond both are part of your portfolio, because as per your risk profile or risk appetite, you have to decide which product is good for you, either bond or equity. That is totally based on your risk appetite that you can say. But yes, diversification is required. That is my answer, because I cannot say equity is better or bond is better, because as a part of the risk profile, you should decide that what weightage of the fund you should keep in equity and what weightage of the fund you should keep in debt.
Please give more information on GSEC. GSEC means government security that are issued by RBI on behalf of the central government. And that is the best way to understand. People who are saying they want to learn more about basics, I think Dr. Kapil will talk about the basic courses NISM does, and obviously India Bonds, you can go to Bond Uni. There are a lot of interesting basic blogs we have written there. आप search कर सकते हैं, उसमें दे सकते हैं. Question, when do we receive a participation certificate? Sir, वो 4 to 5 days of this is when we're going to go. Is YTM greater than coupon better for investment? Sir, please answer the question.
So if the YTM is greater than coupon, yes, I can say, because you are buying a bond at a lesser price, and if in future you are thinking that interest rate is going down, if interest rate is going down, in that case, the YTM will reduce and you can take the advantage of capital gain in that particular part. So that is a part when you want to take the advantage of capital gain, definitely the expected YTM higher and for shorter time can be good for you.
Sir, does SEBI ensure full refund of money in case of default of listed bond? No, not at all. If you've read or heard our webinar, there is no guarantee by anybody on issuance of a bond. SEBI will not guarantee. There is a question आता है कि default में क्या होता है. There is a recovery process in the country, and we have seen recoveries happen in the past. And basically, if the bond is secured, then you sell the assets of the company theoretically, and जो भी आपका recovery होता है, आपको वो मिलता है.
Yes.
I will repeat again, bonds are not guaranteed, bonds are not assured, nobody will assure. Is bond risky than equity? I'll try once. So every asset class is defined by how much volatility. So riskiness is defined by volatility. Volatility matlab the price moves up and down so much, right? Bond ka price usually is much less volatile than equity. So in finance term, it's deemed to be less risky than equity. That's why equity में higher risk है तो आपको return भी higher है, bond में low risk है तो आपको return भी low है. It's a relative term. It is bonds are not without risks. Who regulates state government bonds? Regulator is SEBI of
SEBI.
state government and sorry, state SDL, state development loan is RBI, state guaranteed bonds is SEBI.
SEBI.
Questions keep on coming. I will go on to the next question. For youngsters, sir, people are asking when should one start investing in bonds? In their 20s or later? What do you suggest?
So I suggest whenever you starting investing, it should be early stage investment will be good for you because it will again try to hedge your portfolio risk that I can say. So,
Hmm.
but when you invest, it should be not early stage, not a later stage, but you should start investing from the early stage only. You just keep the 10% or 20% of a portfolio into the fixed income.
No, absolutely. I think globally allocation may it's 60, 40, 70, 30. India may be advised कि हाँ 20%. You can
Yes.
start at any stage.
Any.
So I think portfolio diversification is a skill as an investor you have to think about in the next 20 to 30 years. And that's why you should probably start investing in bonds even at a early stage. Uh, One question keeps coming, how to buy foreign bonds? Sir, we do not have the answer for that. There are other, it's beyond the scope of today's discussion. India bonds does not have any foreign bonds. There are regulations around foreign exchange. Abhi IFSC khula hai, which is doing very well, and there are ways to do that, but we are not experts and we cannot ask and suggest to you. Uh, how liquid is the bond market if you need funds? Again, liquidity is defined by the rating of the bond. Agar aap today you buy a government security or a public sector AAA, you will find almost instant liquidity, 5 minutes mein. A lot of people think liquidity across all bonds is the same. It is not the case. AAA, government securities, SDLs, you get liquidity immediately, and that's why you get a lower rate interest rate for them.
Lower.
Double A is also liquid, but single A, triple B onwards. Uh, for a platform like India Bonds also, you send us a request on a best effort basis. We try to find you a buyer. हम two-way prices नहीं दिखा सकते per regulation because we are deemed exchange then, but we try the best for people who buy from us to find them a buyer subject to market conditions. There is no assured buybacks, but liquidity comes from a rating thing. What is the outlook for gilt funds in 2025? Kapil sir, to you.
So again, that is a macroeconomical perspective is there. So yes, when we say about the yield fund outlook in 2025, that totally based on what action Reserve Bank of India is going to take on the interest rates. If interest rate will be stable, then there will be, we can say there will be no major change in the price of a bond. But yes, if this interest rate is going to be changed by certain basis point by the RBI, it might be increase or decrease depending upon the macroeconomic factors, geopolitical risk, or the recently elections of the USA, or what Fed is going to take action in the next part. So that will be affect the price of a bond. So that is just saying that if since the Fed has reduced the rates, but RBI has not reduced the rates since last 2 to 3 announcement. If RBI will reduce the rates in 2025, definitely there will be an opportunity to rise into the price of the G6.
Yeah. One question, sir, I'm holding 7.5 IRFC and tax-free bonds. Please discuss the risk. So because they're issued by public sector units, PSUs, the credit risk is very low. The risk you have is of interest rate risk. If interest rates sort of go much higher, the value of your investment will go down, which we do not see the case. One question, sir, if the bond is taxed at the IT slab rate, which income is treated as capital gain? You want to answer? That's
So
the
capital gain income is, let's take an
principle.
example. You purchase a bond with the last example that we given at 9,90,000 rupees. Okay. And you're selling that bond at 1 lakh rupees or 10 lakh rupees, the maturity at par. So 10,000 rupees is your capital gain. But interest is your regular income tax will be there. So whatever the difference in the price, buying and selling, that is a capital gain will be considered.
Hmm. One person saying, I'm 52 years old. Is it right time to start investing? Sir, as said, any time is a good time. It depends on your risk appetite. But every portfolio should have a diversification. So bonds should be part of your portfolio. And in most cases, it gives you higher returns than FDs and more flexibility. Any books you recommend, sir? People are saying any books on fixed income that they can read.
So there is the material which is available on the NISM portal. Also, we have the study material on fixed income security that will give you the prospects of the fixed income security to you. Definitely, you can read or download, freely available download on the NISM portal website is there. You can download and read it. That is in the English, not in Hindi, but yes, that is available to read.
ठीक है. Do I have to pay broker fee to India Bonds if I seek advice? India Bonds does not give any advice. It is a pure platform which displays the bonds, and investor has to make their own choice. One question: US interest rate are decreasing, then why is India rate not declining? There are a lot of macro factors at play. Please remember, when US rates were going higher, also India did not go higher, right? Uh, Interest rates are determined by various factors, including growth rates. India has one of the highest growth rates. US rates have declined from the peaks, but that does not mean necessarily that India will also cut rates. Again, we are not champions here. Dr. Kapil, you can comment,
No,
but there are a lot of.
I am also not champion. I'm not economic person.
So that depends. Uh, is there any certification offered by NISM? We will have a slide which will tell you of the certification. I think more or less
We
uh,
answered the question.
we
One
are we
question
are
that
we
I
are com-
repeatedly see that how to invest into the RBI bond or T-bills, GSEC was there.
yeah, please answer that. Yes.
So even you can apply, you can invest into the GSEC or T-bills directly from the RBI Retail Direct, or also the platforms like the OBBB or India Bonds platform also there.
Yes.
But yes, for investing into the RBI GSEC, you can invest in T-bills also. There was one of the question whether the retail
Yes.
investor invest. Yes, retail investor can invest into T-bills also.
People keep asking, can we download this PowerPoint? No, you cannot download any option. This will be available online on NISM, on our website, and on YouTube channels after a few days.
Yes. I think we answered almost.
Someone is saying, have you informed that India bond market is bigger than India equity? No, we have not informed that. It is incorrect. Our data is from SEBI, and the equity market is definitely bigger as of now, close to $5 trillion, and the bond market is $2.65 trillion. In the Western world and developed markets, bond markets are bigger than equity markets like US or Europe. India is a developing market.
Developing.
It is not possible. One question is, can I have an RD or a SIP kind of investment in bonds? We are working on that. We do not have a solution at India Bonds for that. But because the term is only 10,000 rupees, so you can start investing. So you can keep coming back and buying bonds and adding. Max returns. So I think we are done here on Q&A. If there's something which we haven't covered, I think we answered more than 100 questions. Please continue writing to us. Can we move back to the presentation, please, team? There are 2 or 3 final slides.
So yes, so this is the answer of the questions that lots of you ask. What is the certification that you can do? So NISM is providing some certificates on the fixed income security in association with the FIMDA. So these are the self-paced e-learning programs. You can find the link on the NISM website, where you can clear if you want to learn about the basics of Indian debt market or interest rate derivatives or introduction to fixed income securities, fixed income methodology. So currently 4 modules are available on fixed income site on NISM website, where the learning hours is 3 hours of each module. You'll get the certificate also. What is the fee included in that part? Is also mentioned over here. So these are the certification that NISM is providing. So all the contents are the pre-recorded lectures are there in this contents. Next slide, if we can go. Vishal.
Obviously, yeah, we have a series. Next slide. Next webinar is on 11 December. Please tell your friends the emails will go out. This will be bond jargon simplified. A lot of jargons. One question, sir, Barbar Aratha, we have to prepare next time is because it needs a detailed answer.
Yes.
What is the bond duration, Macaulay duration?
Yes.
You'll be the best person. Next time we will. So please do attend for jargons simplified.
So this will be next webinar that we are going to conduct.
Yes. I think Q&A ho gaya hai. That brings us back to the NISM team. Rajalakshmi, please. Yeah, can we stop sharing?
Thank you so much, sir. On behalf of NISM and India Bonds, I extend our sincere gratitude to both Dr. Kapil Shrimal and Dr. Vishal Goenka for this insightful presentation on various types of bonds and their features and advantages. Your expert perspectives have provided us with valuable knowledge on this complex and crucial area of finance, enhancing our understanding on how bonds can be a strategic part of our sound financial planning. I would also like to thank each of the participants who have joined us today. Your enthusiasm and engagement are what make these sessions truly valuable. We hope today's discussion has enriched your understanding and it will support you in making informed investment decisions in the future. Thank you once again to all our distinguished speakers, to everyone else also who are involved in this webinar success, especially the IT team. We look forward to see you all in our future sessions. Have a great day ahead.
Yes, thank you. Just thank you on behalf of India Bonds as well. And I'm not doctor, I'm not as qualified as Dr. Kapil. But please, bonds are great and we are very passionate about it. Keep writing us to questions, attend our next session. And thank you everyone for your time.
So thank you,
Thank you, Dr.
Lakshmi.
Kapil.
Thank you, Vishalji. Thank you. Thank you. Bye.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.